Hello, guys. Hello, and welcome back here to my content update for the YouTube channel. Today, as you see, I bought a webcam so that you can see me. I don't know if this format is more of your favorites, but maybe let me know if seeing me on webcam is better, or I can just get the webcam away and maybe use it for a stream on some days of the week, maybe I don't know, in month, okay, in weeks and month when I will have time. Anyway, today I would like to let you with this thoughts I had on the market because I was watching the Fred data and I was using it to adjust GDP by the flexible CPI. Now, the flexible CPI is the inflation measurement, as I wrote right here, that is taken from goods you buy in everyday life, like motor fuel, fruit, vegetables, gas and electricity, and more. So, everyday life buying products, aka current real growth adjusted, meaning that this is the GDP adjusted, the gross domestic product of United States adjusted for this flexible CPI. So the price you perceive as an inflation on today's markets, when you go to the supermarket, for example, we this is the GDP adjusted. So we see that since 2020 we are trending lower, so we're not growing. Even if you took the actual GDP from Fred. I'm trying here to get you the data. Meanwhile, I'm talking. If we take the gross domestic product here, let you see. Take the gross domestic product, it seems to raise year on year, even in 2020, for example. We experienced a little loss in GDP growth, but then we'll kept trending higher. This is the gross domestic product in dollars terms. Even if we watch real GDP, that is a different method of measure the GDP, the gross domestic product, adjusting by inflation of all kind of basket. So even with medical care inside, some of the services and goods that not change their price very often. Some products or services may change price every year or every 4 years. Meanwhile, in this inflation, the flexible CPI, it is called flexible CPI actually, flexible price index. In this case right here, um, we are watching a trend of a basket of goods trending higher. That is actually the day-to-day services and products, okay? And we adjust the gross domestic product for this measurement. So we adjust the average perceived inflation on today's portfolio, not on 1 year from 2 years from now. Today, from the very variation of goods that are in a volatility actually. and for the very volatility of the goods you spend today and tomorrow and from and the next month from the GDP. To I don't know if I've been explaining this right for you or not, but if you have any question, you have my comments down below. Anyway, going on here, we saw that we are retesting a level that we saw back in 2015 here and 2017, more or less. And this is a step back of more than 7 years in only 2 years, as I wrote here, in only 2 years of pandemic and monetary policies that took inflation and quantitative easing as base. If this trend continues, we are going to experience a major collapse in all fiat currencies, causing countries to default on their debt. Recession is in, is inflation coming? I mean, by that I mean that probably if we continue to have this kind of, I will arrive to it, this kind of widening and actually widening and not of credit and debt, in narrowing of credit and debt, we may see these types of capitulations right here on GDP very often, until we maybe reach a point where the GDP will actually collapse on itself because there is too much of a pressure on the liability markets, on the loans and etc. that are actually the leverage on the fiat system, that the system has to collapse and get or and try and get another methods. If this ain't happen anyway, we'll see. We'll see now. I'm going through this. I opened this thread with the idea that fast inflation adjusted growth is a useful indicator to monitor short term market behavior because uh, CPI, flexible CPI, is actually really volatile as a measure of inflation. So it's actually perceived by consumer day by day, month by month, and so is a good, useful indicator to monitor short-term market behavior if adjusted with the gross domestic products. And meanwhile, if we want a long-term market behavior, we may adjust it with the sticky CPI, but this is not the argument for this video. If you want, if you watch this metric closely, relating it with Bitcoin price action, because I also took this and put it on a perspective of crypto markets right here, you can start noticing some correlations. Starting in Q1 2020, the GDP to FCPI or flexible CPI started trending lower, but only in Q3 2020 there was a first strong decline. As you see, it started trending lower right here on the Q2 2020, and then slowly but slowly it kept going down till Q2 2021, and then it started trending higher again. Okay, only in Q3 2020 was a first strong decline, or year actually. Okay, how did the Bitcoin price react to that? It started moving up, FOMO kicked in, and price went parabolic with no much sense because it was the bull run and the actual bull run of 2021. FOMO kicked in right here and started the um, the bull run we had in Q3 2020. Q3 is actually September, okay, September, October, and it started trending higher right when this metric I developed was actually trending lower with a huge spike in the downtrend. The FCPY, the flexible CPY adjusted gross domestic product, kept trending lower in a bearish pattern that could be seen as a bull flag until Q3 2021, when we had our last all-time high. Meanwhile, Bitcoin kept trending higher, stabilizing in the macro area we are in since January 2021, getting lower after the break of the flag below. As you see, in fact, on Q3 2021, Q3 2021, we were right here. October, September, we was experiencing the last all-time high that was at that cut bounce. And actually, in the same moment, we had this right here. If we take the adjusted gross domestic product for flexible CPI, we were breaking this trend line right here, this bull flag, and started trending higher. And since then, we are still here. Um, we are still here, breaking slowly the lows of the last year low. So these are correlation right here for the broad market and Bitcoin itself as the crypto market, because when you go global with the markets, you have implicit correlations and volatilities with the broader economy. If broader economy goes in a certain way, Bitcoin reacts to that as people do, because people drive the market, buying and selling products, okay, and react to behavioral patterns and even more with fear and great emotions actually. Now that this metric is starting to trend higher, meaning that the gross domestic product economy strength of that is the economic strength of a nation, the value that services and products are brought to people within the nation itself is growing. This value is growing, outpacing the flexible CPI or the inflation perceived and so having a real growth under the surface. Now that this is happening, the economy is getting stronger, really, really, really slowly, as you see right here, but still it's an uptrend. It's a slow uptrend. You can see that it's flattening right here, but maybe we could have a spike up or a little bit of a spike down and a spike up again. This is just trends, as you may know already, from price charts, higher low, lower highs. That is trends. And we are now seeing Bitcoin slowly falling off the lows, as I already said, precedently set up by the precedent downturn last year. That is right here that we set the low, and we are breaking down right here, and now we're sitting at 28k. And probably this is the real motive, the real reason why the market is reacting in such a way. What I made a question now. What if this trend continues? If we see gross domestic product outpacing again and again and again the flexible CPI or any other instrument on real GDP, on any other instrument of inflation adjusting, we may be, well, in the first place, I wrote, well, in the first place, a strong economy is the reflection of a strong medium of exchange paired against other mediums of exchange. So a strong DXY for the UX. DXY is actually the pair of the dollar against dollar paired against the GPY and the euro as a major, okay, as a major weight in this pair, but also with other currencies. And the actual medium of exchange of unit of account, so a currency of a state, is the actual uh, stronger correlation with as a stronger correlation with the economy itself. So the DXY in this case, that is the dollar, paired against all these other currencies. When the dollar is stronger, um, so so is the economy. And if the xy is stronger when the xy is stronger, when inflation is tamed by monetary policies from the Fed, also known as when the Fed rate hikes and get back the power, the purchasing power to the currency itself. Okay, and it's not inflating away the purchasing power of this currency. A strong dollar in this case, that is the denominator in the pair BTC USD, helps to worsen the situation of the Bitcoin price chart. What I mean by that, that if in a proportion, you had um, two of the actual factors, um, one of the two actual factor that is growing, the other is diminishing in a ratio. Sorry, uh, the other is actually diminishing because if you have one here and one here, one divided by one is one. But if you add one divided by two, for example, you have 0.5. So if the USD is actually growing, meanwhile, Bitcoin is actually as a value, as a demand for Bitcoin is actually still the same or is worsened. USD, meanwhile, USD in fact actually is growing strongly, outpacing the Bitcoin demand. It actually helps this pair to worsen the situation of the price. Okay, because you will have a more purchasing power for USD for every BTC you buy. Okay, with the same USD that you buy today, if tomorrow USD is more valuable against other currencies, you will have that. Maybe today you buy some Bitcoin with $1. Tomorrow, if it's stronger, you buy the same Bitcoin with 0.99 cent of a dollar. Okay, this is the how it works actually. So there is a lot of things I'm explaining today, and I'm doing this for free because I want you to actually open your mind and learn about how macroeconomics works in not only in an inflationary environment, but in general, so that you may know how and when and what is actually is currently occurring in the market, in the broader economy, and as well as your state, nation, or wherever you are on your currency that you have today, so that you can take measures to protect yourself and your family, because this is not just an economic and financial speech. Is more of knowing and protecting and helping each others as a measure of strong correlation we have each other in the world. And Bitcoin is the safest method we have for save our ass in the case of a disruption in the economy itself. Now, I'm going too much in deep right here, but I want to make you know. I want to make you know that. Okay, let's bring it on anyway. So, if inflation is tamed and the economic growth is sustainable, so if the Fed is doing a good job taming inflation, and growth is actually going on, is strong, the need of Bitcoin fades away because there is no need for an alternative when this actual system work. But if economic growth is sustainable, if economic growth is sustainable and inflation is not going to diminish anytime soon, the need of an inflation hedge asset like Bitcoin or gold or whatever is going to get stronger, because if the actual system doesn't work, it's in the brink of collapsing on itself. Well, what's the alternative? Here we have an alternative born with the last financial crisis in 2018, with the mutual subprime crisis, and gold. It's also an alternative actually. Um, maybe the best alternatives here is for people that do not have the necessary mediums to store gold. It's actually Bitcoin, because it can be brought and sent across the world within a USB. Is not as is simple to take possess of your digital asset right here, that is actually have a meaningful store of value narrative behind. And taking in consideration what I said in my previous thread on inflation and how to prepare for the next month or years, and I will actually do maybe another video for this, because this is much more in depth on how to survive something like this. I will do it because I want to help people out as much as possible. But today I'm gonna stick on this. And so we'll bring it on, and we'll just take it short, and says that, so the Fed, if the Fed is not capable of dealing with the global madness we are in with the monetary policies, because it can't, I will explain it in the next video why, exactly what it can and what it can't do. There are two ways, principal ways, maybe a third way, but two principal ways we could expect the market to react. The most probable, in my opinion, is a slow collapse of fiat currencies and of the countries overwhelmed by debt through cycles of widening and narrowing of credit and debt, lending and borrowing, leading to a 1 million Bitcoin and a 10K gold. Why I'm saying this? Just because of this of this going up and down with the credit and debt, getting the people, the banks, getting people to borrow money, the state to borrow money, and borrow and borrow with interest rates at zero, and then all at once, slowly but slowly, in some cases with some rate hikes here and there, with the stop of quantitative easing and getting the quantitative tightening, they are taking back what they gave, and they take back even more with interest rates of what they gave, and they became and this is they actually are taking away part of the real economy growth, just for the debt itself. Okay, so it's not sustainable in the long term, because if you actually have a loan and over leveraged on your, it's like borrowing, how is borrowing from a bank. If you borrow too much, you won't be able to repay that debt. And the same way, if a country borrow too much and the interest rates hikes, it won't be able to repay its debt, if not with a growth, on augmenting growth, or raising the growth of the states itself, of your family itself. You'll not be able to, and probably this is what we are going through, because the actual, if we see the actual loans, um, all product loans, all product loans. If I can find it, let me just take it away. If you have too much of a loan here, I'm actually taking from my dashboard, you can't repay that debt, and so you're going default. You're actually going default, because there is no other way you can get around your debt. You can't run away your debt. Actually, it's impossible. It's impossible to run away on your debt. Maybe if I can, if you see the whole sector here, debt, securities, and loans are keep growing since the real start of tracking it. So they got slightly high on the very start. They started slowly, but then after the Second World War right here, but then the loans, the liabilities, the level is getting higher, 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 and even higher, getting parabolic until we won't be able to repay this debt. This debt will go straight to the heaven, and we are not going to repair it, repaying it. We will not. We will not. And so that was the most probable option for me. The collapse of the fiat currencies. I don't know when. It can go on for decades until it can't. And the second option is a flattening of this inflation curve, and a reestablished growth with the Fed capable of reaching its dual mandate goal of low unemployment and price stability, where the COVID vanishes and geopolitical conflicts cease to exist, along with supply chain and food production issues. Because there is a lot to discuss about in that thread that I will make a video apart from this next time. There is all of this inside, and if someone invents a measure to actually um, making this system work, it will work, but there will be need there will be a need we need some change in this system. Okay, we need a change in monetary policies, a change in how loans and debt is administered, a change on countries' monetary administration, a change in so much things that it's almost impossible uh, today thinking about this date, thinking about this. In this last case, that for me is the most improbable. We will see a Bitcoin slowly reach the lowest point of its last cycle at 10K or less. Because if the system work, we don't doesn't who's gonna buy something that is worthless? If you have, for example, um, I don't know, a farm with a lot of potatoes, okay, a lot of potatoes, and whatever you want, wheat, corns, and fruit, vegetables of every kind, and someone comes to you and he wants to sell you some of his food. You just say, I have enough food right here, I don't need another type of food, maybe papaya for 100k dollar. I'll take a papaya, okay, but I'll give you $1, for example. uh, and so because I don't need it. Meanwhile, if you don't have a farm, you are in a wasteland of I don't know where, in a desert. If someone comes to you with a papaya, you will give him whatever he wants just to drink. If you don't have nothing, just to eat something. And this is Bitcoin for this financial system that is going probably to a certain point where it can't be brought enough in the future. It will collapse itself. This is Bitcoin. This is the alternative. So I have more to say here about the outcomes we could have if the first option is that we serialize that of the collapsing of the fiat system itself. For example, what will be a possible solution to a generalized default on debt for most countries in the world? What will happen to the current currencies in circulation? Or could CBDCs in general help us getting out of the destructive chaos that will follow such an event? Well, probably not. But this is not this. I will talk about this in another thread, maybe explaining this why, taking in consideration historical factors and anything that could be possibly be brought to attention here, because this is a major problem we have today that people doesn't really understand how the financial system work, how the economics work, and how this debt-based system is working itself. So I will try to explain it. Meanwhile, I'm doing my job right here. That is an educator. Everything we will heard from me is not financial advice. Actually, I have to say it for for my lawyers actually, so they'll be happy. Me, I will be happy. So I'm not going to be sued for anything. This is just my thoughts on the argument, and probably the thoughts of many right there, all across the globe, but I have to say it, and I will help you grow. Your you to grow even for what I can, uh, giving my time here for free, but also giving my time on paid channels like my new company that is ChainLog, my second company. I have another company here that is another type of company. It is a service company in real, actually, in real services world, and I have to have I'm here and there, but this is the second company I'm building right now. I'm building this from scratch, so it will be time before my work will be out for everybody, but it already started, so you have all links in the description right here. Let's go on anyway, or I will make it today. So are you ready for the measures government around the world will take to prevent such a disastrous event to happen? Yield curve control, price control, massive centralization of power, revoke of rights, foods and energy rationing, and so on. I don't want to scare anybody saying this because it's scary to think about such a situation. Is just what if you think it through, how much films, how much documentary, how much or at school when we had wars or everything else, when we studied history, we know that this can happen, this already happened more and more and more times, and could happen again if the system itself collapse. It's just a situation if this happens. It's not going to happen for real, for sure. I'm not saying this. I'm here taking into consideration all the factors, all the possible variation of what it could happen in the future, and this leads us to the third possibility. As I said before, there's a third possibility. We all pray in this case that Bitcoin will save our ass in if the first case is enact, but also that it will keep increasing value even without having such a catastrophic event. We don't need a catastrophic event if someone just uh, learn on how to make the system work, and we may learn too. It can happen. It can happen, and we just need to go through cycles of widening and narrowing of credit and debt with a new system without defaulting on our debt. For this to continue for a long time, though, as I already said, we need a new method of dealing with inflation, new monetary policies, and a more spiritual, caring world to live in. Because with wars, with scarcity, with the famine, this is not going to work. This is not going to work. So we will see how long this debt-based system will hold. I pray not to be here watching it collapse. For all of you, I wish best luck. And this is true. For all of you, I wish best luck. Best luck. This is Chain Analyst, Chain, non Chain. This is ChainLog Analyst for today. And cheers.